The broader markets might be, well, let's call it a yellow light, but I mean, there's a lot of red on the screen. Tesla is going green. Shares of Elon Musk's electric vehicle giant up more than 12% right now. Souped up at this hour after not one, but two major sellers who short stocks, okay? Andrew Left of Citron and Richard Pearson of Mox Reports, they announced they are now going long. They are doing a 180, reversing on Tesla. Both actions coming after Tesla announced it would be releasing its latest results ahead of schedule, now slated for tomorrow afternoon at 4:30 p.m. Eastern Time. Mox Reports pointing directly to the sped-up release date for its change of heart. I would say moved up. They moved up the release date, now anticipating blowout results, moving back above the $300 mark. Shares right now, though, at $292.03. So we got a little bit of a distance to go there. But Citron, this is an interesting one. Andrew Left says that Tesla's disruption and dominance in the auto industry can no longer be ignored. And that's not the least of it, Charlie Gasparino. There were way better comments in this. He wrote, with a great deal of analysis and due diligence, we can say for the first time, we are long Tesla. Have these guys really changed their minds, anybody else's minds?
Well, I don't know. It is. Listen, if you're on social media and you have to deal with the Tesla short trolling that goes on, you know, you kind of like it when someone sticks them in the eye, like they're doing today. I mean, the shorts are getting crushed today. And by the way, some of this is exaggerated because there's some short covering. A lot of these shorts are, you know, some guy in his apartment in Manhattan or his mom's basement in Toledo, and they have to cover their shorts because they don't have like a huge position, they don't have a lot of money, and it's a lot of that going on here. So that moves up the stock price. A couple things I would say, and tomorrow is the earnings. We're going to get earnings tomorrow. A couple things I would look for. I would look for, you know, just exactly how long it's taking Tesla to pay off vendors. Any sort of disclosure we get on that. You know, the word on the street is that most companies pay their vendors in 60 days. Tesla is stretching it out 90 days. And is that impacting cash flow if it improves? I mean, and that's kind of a tell. That means they're getting better cash flow numbers and maybe some profitability because guess what? They're stiffing their suppliers or their vendors for a longer period of time. And that's something to look for. The other thing would be the gross margins on the car. I mean, you know, they were always talking about, you know, profit margins of 25%. I mean, is that ever achievable? Because if you don't have decent profit margins and you're running out of cash and you have $1 billion plus of bond payments due, which they essentially do have as of right now, particularly if they can't get the stock above 360, you know, you have to pay cash for that $1 billion, $1 billion in cash in March, I believe. Yeah, for the convertible bonds. Exactly. You know, that's an issue. So listen. The market is expecting very good news tomorrow. The market is expecting that some sort of profitability somehow.
Well, for both of these guys to come out today. But Andrew Left of Citron is no dummy. He has made some really smart calls. And with this comment, he said, like a magic trick, while everyone is focused on Elon smoking weed, he is quietly smoking the whole auto industry. Charlie, I told you this. I pushed back on you. This is a viable company. This is not a pyramid scheme, and this is a great car.
Is he really smoking the industry? I mean, it's you know.
He has the number one electric vehicle, the number two electric vehicle, and the number three electric vehicle.
Mr. Left is not exactly perfect in the investment world. We can spend some time on that. But what I'm saying to you is that, you know, I'm just telling you, and I tell everybody this, I have no horse in this game.
Neither do I.
I couldn't care less either way. I annoy the shorts. I annoy the longs. And I'm going to tell you this. Be careful with these numbers because the bottom line is this. They are a company that burns through a lot of cash. They are showing better cash flow possibly tomorrow, but they're also not paying their vendors in typical time periods. They're paying them and they're stretching it out. And, you know, we have to look at the profit margins on these cars. And then you have to sit there and say, is it a $300 stock based on all that? Plus, they got a big bond payment that's coming due. They have two. They have a smaller one in November, something like $250 million or in that range, and then the larger one in March of close to $1 billion. So I would just say you got to see these numbers tomorrow, and we pick them apart. Listen, no one wants a company to fail. I mean, particularly something that would do good for mankind, which obviously Tesla would. Yeah. But the numbers, Liz, the numbers have to work. And, you know, there's still some issues with these numbers. I'm telling you, this is a stock, if you're the average guy, listen, have some fun with it, but
Charlie,
watch out.
I want you to sit in the chair for a minute on some breaking news that we are getting on Apple. Apple is apparently launching a TV subscription service in more than 100 companies.
Yeah, now that's fascinating.
Just hitting the tape, the company is going to launch the TV service in the U.S. first half of 2019. They'll make the app available globally in the following months. Watch Apple. It's up 1% right now at $222.71. We are also looking at, hold on, what? Okay, and I just want to as we're looking at Apple, we should be pulling up some of the what would be competitor stocks, and that's Netflix. Go ahead, Charlie. What do you make of that? Netflix is up about 1%.
Here's what's interesting about Apple, about Netflix, about Amazon. There is a theory out there that those would be the natural buyers of CBS, because CBS, as we've been reporting, you know, once they get the Les Moonves stuff and some of the management stuff done with, they're essentially going to seek a deal, to do something, or at least look at potential deals.
Can
or
we get
focus
Netflix
on it.
Okay, here we go. Well,
and you know, here's the thing: it looks like, based on what you're reading to me, that Apple is not going to the purchase route. It's going to like Netflix and Amazon, it's going to develop its own content. It doesn't need CBS and old media. That's what it seems like you're saying to me. It's a fascinating story. And on top of that, you have Comcast, possibly, as we reported yesterday, which this got some notice. A lot of people called me on this yesterday, Liz. You know, if they really make a bid to try to buy a majority stake in Hulu, you know, Comcast would actually have a foothold in that space known as over-the-top, OTT, where people are cutting the cords, cable subscriptions, and you get your content. So you get your content without the major cable bundle.
And Apple is not moving. It's not moving on this.
But I'm just telling you, but this is a bigger story than moving the stock. This is about, you know, Apple not being in the market to buy CBS maybe.